And Christopher Wood, the global head of equities at Jefferies, believes that it is only a matter of time before Sensex reaches the 1 lakh mark. Chris Wood's latest greed and fear note also says that foreign investors are now coming back to India as they have retreated from China. My colleague Hiral Dadia joins us with the key takeaways from the note.
Jefferies says that it's only a matter of time before the Sensex touches 1 lakh. In fact, he reiterated his bullish view on Indian stock markets and says that this target is achievable, assuming a 15% growth in earnings and a 5-year average forward price to earnings multiple of 19.8 times. He also believes that still like all long-term bull markets, the Indian stock market will continue to climb the proverbial wall of worry. Now, one obvious worry that he cited is which emerges from questioning whether the Modi government will be re-elected and another potential risk that arises from a further reduction in retail investor activity after the stock markets have traded in a tight range so far. However, the risk of Modi not being re-elected is much lower despite the recent defeat in Karnataka, according to Wood. Now, the note also said that highlighting that the domestic asset management story of India continues to be attractive, the equities account for an estimated 4.7% of the household assets at the end of March, which highlights the opportunity, and the inflows in the domestic equity mutual funds continue to pour in, which has been dominated by systematic investment plans. The SIPs also have been the key reason for the resilience of the Indian stock market during the recent monetary tightening cycle. In fact, Wood has gone ahead and increased India, Korea, and Taiwan's weight by 1% each. In terms of investments, HDFC Life Company and Standard Chartered will be replaced by investments in SBI Life Insurance and Zomato. Investments in Bajaj Finance, Godrej Properties, and Macrotech Developers will be increased by around 1 percentage point each. And very lastly, if you see in terms of investments in Zomato, that is introduced with a 4% weight at the cost of HDFC Life Insurance being removed. REC, we will see an increase by 200 basis points by shaving the investments in ONGC. So clearly, in the global long-only equity portfolio, Zomato will be added by shaving investments in JD.com and Alibaba by 2% each. So these are the few changes that we're looking at, but the key is Sensex at 1 lakh in the next 5 years. Back to you.